Whenever I lift this silver into view, it really puts things into perspective. This isn't a massive pile. It's about 40 ounces, just 2 tubes. Yet at current prices, this compact stack carries real financial weight, all concentrated in something you could easily hold in one hand. Roughly 6.5% is the added cost now hitting silver buyers in Washington state after the removal of the sales tax exemption. And that single change is enough to completely alter how stacking decisions are being made in real time. When you combine that with silver trading near 71 after falling from 80 just days ago, the timing becomes critical. This is no longer just about price, it is about cost layered on top of price. In this video, I will show you how this tax shift directly affects your buying and selling decisions. Then, I will break down how price behavior and policy changes are colliding at the same time. And stick with me until the end, because I am going to explain to you how to avoid overpaying in a tightening window. I need to pause for a brief moment. If you're benefiting from this information and want to stay ahead of this before everyone else catches on, hit subscribe. Most people are not understanding the patterns of silver price. They end up walking into situations in which they are totally unprepared and make rookie mistakes. This will certainly happen if laws like we are seeing in Washington continue to spread to other states. They walk into a shop and pay $10 premiums above spot, or they hand over their silver to a local dealer and lose $10 below spot on the buyback. Lean in close to this so you don't get burned. Now, here's where this becomes real. You need to understand the story involving taxes and the state of Washington. As of January 1st, 2026, silver is no longer exempt from sales tax in that state. That means a $1,000 purchase now carries an additional $65 or more in tax, depending on location. That is a direct increase in your entry price, and it changes behavior immediately. At the same time, look at what price is doing. Silver dropped from about $80 down to $66.93 on March 19th, which is a decline of over 16% in a short window. Since then, it has struggled to move back above $73 and is now sitting closer to $71. That tells you something important. Buyers are not stepping in aggressively at higher levels, and now, in places like Washington, they are facing an added cost just to enter. This creates a split in the market. In states without sales tax, silver at $71 is already being debated as either a fair entry or a waiting point. In Washington, that same ounce effectively costs closer to $75 after tax. That difference matters. It pushes people to delay purchases, look for out-of-state options, or wait for price to drop further toward levels like $68, where the math starts to make more sense again. Here's the key takeaway. When you combine a 6.5% tax increase with a market that has already shown it can drop over $13 in a matter of days, you cannot afford to ignore either factor. Price and policy are now working together. I am not buying in taxed environments at $71. I am waiting for either a stronger move above $74 or a pullback closer to $68. Because once costs rise, your margin for error shrinks, and that is where most people get caught making the wrong move.